Welcome back to Global Monetary Watch. Today is August 1st, and we have another important update covering the latest developments surrounding the Iraqi Dinar and the Vietnamese Dong. Over the past several months, discussions about these currencies have continued to attract attention as governments, financial institutions, and international organizations work through a series of economic reforms. Rather than focusing on rumors or speculation, today's report examines documented developments, official policy changes, and broader economic trends that help explain why many observers continue to monitor Iraq's financial system closely. Understanding these developments requires patience, context, and a careful distinction between verified information and assumptions. One of the biggest reasons for the increased attention is that Iraq's financial sector is undergoing a period of steady institutional change. These developments are not isolated announcements, but part of a broader effort to strengthen the country's banking system, improve financial oversight, and align national policies with internationally recognized standards. Over time, Iraq has expanded cooperation with organizations such as the International Monetary Fund, the United States Treasury, and other global financial partners. These relationships are focused on improving transparency, strengthening compliance, and building confidence in Iraq's financial institutions through measurable reforms rather than short-term solutions. Looking at recent developments as a whole, a consistent pattern becomes clear. Iraq is continuing to implement reforms that affect multiple areas of its economy simultaneously. These include banking modernization, financial compliance, monetary policy improvements, and efforts to encourage broader economic growth beyond the oil sector. Each of these initiatives represents part of a much larger framework aimed at creating a stronger financial environment. While no single announcement changes everything overnight, the combined effect of these ongoing reforms demonstrates a structured approach toward long-term economic stability rather than isolated policy decisions. Another important factor is that Iraq's currency does not operate independently from the rest of the global financial system. Economic developments around the world continue to influence how countries manage trade, investment, and monetary policy. Recent changes in international markets, shifting geopolitical relationships, and evolving trade partnerships have all contributed to a changing financial landscape. As nations adjust to these developments, countries like Iraq must also adapt their financial systems to remain connected with international markets. This broader perspective helps explain why domestic reforms often receive significant attention from global institutions. Vietnam provides an interesting example within this broader discussion. Beginning on July 1, 2026, Vietnam was officially recognized as an upper-middle-income economy following years of sustained economic development and institutional progress. This milestone reflects decades of reforms involving manufacturing expansion, foreign investment, infrastructure improvements, and stronger economic management. Although Vietnam's currency continues to trade at relatively low nominal values compared to major global currencies, the country's economic achievements demonstrate that currency values alone do not define national economic success. Instead, long-term structural improvements have played the central role in Vietnam's progress. This comparison does not suggest that Iraq and Vietnam share identical circumstances. Their economic structures, natural resources, political histories, and development paths are very different. However, there is a broader lesson that observers often draw from comparing the two. Durable economic progress generally follows years of institutional reforms, stronger governance, improved financial credibility, and greater international confidence. Those factors tend to develop gradually rather than through sudden changes. For Iraq, many current reforms appear to focus on strengthening these underlying foundations rather than pursuing rapid transformation. Within Iraq itself, one of the most closely watched institutions remains the Central Bank of Iraq. Recent restructuring efforts inside the central bank have attracted attention because they extend beyond administrative adjustments. They relate to how monetary policy is managed, how financial decisions are supervised, and how the institution continues working toward internationally accepted standards of governance. Independent oversight, transparent procedures, and effective regulatory systems are important elements that many international organizations consider when evaluating a country's financial sector. These reforms are therefore viewed as significant components of Iraq's broader modernization efforts. International specialists and consulting organizations have also participated in reviewing aspects of Iraq's banking operations. Such involvement is generally intended to strengthen internal systems, improve regulatory practices, and support compliance with international financial expectations. These reviews often examine risk management, operational procedures, financial reporting, and institutional governance. While these activities may appear technical, they contribute to the long-term credibility of the banking system. For countries seeking deeper integration with global financial markets, strengthening institutional quality is often regarded as an essential step rather than an optional one. Another major area receiving continued attention involves Iraq's regular economic consultations with the International Monetary Fund. These assessments have consistently highlighted several priorities, including improving anti-money laundering measures, strengthening counterterrorism financing controls, encouraging private sector banking development, supporting fiscal diversification, and promoting greater consistency within the exchange rate system. Many of these recommendations have remained on Iraq's reform agenda for several years. Recent developments indicate that multiple initiatives are now moving forward simultaneously, suggesting continued efforts to address long-standing structural challenges within the country's financial system. Additional progress can also be seen through Iraq's broader economic engagement with international partners. Discussions related to World Trade Organization accession continue to advance. Banking reforms remain under implementation, and various bilateral economic agreements have expanded cooperation with foreign governments. These developments collectively demonstrate Iraq's intention to deepen its participation in the international economy through institutional reforms and regulatory improvements. While each initiative serves a different purpose, together they contribute to a broader strategy aimed at strengthening economic credibility and improving the country's long-term financial framework. As these reforms continue, it is equally important to approach the discussion with realistic expectations. Over the years, conversations surrounding the Iraqi dinar have often been dominated by two opposing viewpoints. One argues that a dramatic currency change is always just around the corner, while the other dismisses every reform effort as insignificant. Neither perspective fully reflects the information available through official reports and documented policy actions. A balanced review requires separating confirmed developments from personal opinions and recognizing that economic transformation is usually a gradual process rather than an overnight event driven by a single announcement. When examining Iraq's financial position today, several measurable indicators stand out. The country continues to benefit from substantial natural resources, particularly its large oil reserves, which remain an important source of national revenue. At the same time, authorities have been working to strengthen foreign currency reserves and maintain stability within the domestic financial system despite regional and international economic pressures. These efforts are accompanied by broader initiatives aimed at improving public finances, supporting banking reforms, and encouraging investment in sectors beyond energy. Together, these factors illustrate an economy attempting to build stronger long-term foundations. The Central Bank of Iraq has also demonstrated a continued focus on maintaining exchange rate stability while implementing reforms designed to improve confidence in the banking sector. Managing monetary policy during periods of global uncertainty requires careful coordination between financial authorities and government institutions. Rather than introducing abrupt changes, policymakers have generally emphasized gradual adjustments supported by regulatory improvements and enhanced oversight. This measured approach reflects an effort to balance economic stability with ongoing modernization, ensuring that reforms are introduced in a way that minimizes unnecessary disruption to financial markets and commercial activity. Government policy has likewise evolved over recent years through the approval of national budgets, implementation of economic legislation, and expansion of cooperation with international partners. While political challenges remain part of Iraq's landscape, there has been visible progress in advancing policies intended to strengthen the country's economic framework. International agreements covering trade, investment, infrastructure, and financial cooperation demonstrate an ongoing commitment to integrating Iraq more closely with global economic systems. These developments are often viewed collectively rather than individually because their combined impact provides a broader picture of institutional progress. One topic that continues to receive significant attention involves the long-term future of Iraq's currency structure. Discussions frequently reference two distinct concepts that are sometimes confused in public conversations. One involves redenomination, commonly described as removing zeros from the currency for accounting and transactional purposes. The other concerns changes in currency valuation through monetary policy. These are separate mechanisms with different objectives, procedures, and economic implications. Public discussion often combines the two, but official policy statements have historically treated them as different possibilities requiring different economic conditions. Based on available information, Iraqi authorities have previously indicated that removing zeros has been considered as a long-term objective rather than an immediate policy action. At the same time, officials have consistently emphasized the importance of maintaining financial stability before implementing any significant monetary changes. Stable inflation, adequate foreign reserves, effective banking operations, and institutional readiness are frequently identified as essential prerequisites for major policy decisions. While observers continue to monitor these developments, official communications have not provided definitive confirmation regarding the timing or direction of future currency measures. Another closely watched issue involves Iraq's exchange rate system and the relationship between the official exchange rate and the parallel market. For an extended period, differences between these two rates created challenges for financial stability and contributed to inefficiencies within the market. In response, Iraqi authorities introduced reforms aimed at strengthening compliance procedures, improving banking operations, and reducing opportunities for irregular currency transactions. These initiatives have been supported through cooperation with international partners and have become an important part of the country's broader financial reform agenda. Recent developments suggest that the gap between the official exchange rate and the parallel market has narrowed compared with previous periods. This outcome has not occurred by chance, but reflects the implementation of coordinated regulatory measures and enhanced oversight of financial transactions. Reducing this difference is widely viewed as an important step toward improving confidence in Iraq's monetary framework. A more consistent exchange rate environment can contribute to greater transparency, strengthen market efficiency, and support broader financial stability across the banking sector. Observers following Iraq's reform process often note that exchange rate stability represents only one element of a much larger transformation. Banking modernization, digital payment expansion, anti-money laundering compliance, fiscal discipline, and stronger institutional governance all work together as interconnected components of economic reform. Progress in one area often supports progress in another, making it important to evaluate developments within the broader context of the country's overall modernization strategy rather than focusing exclusively on individual policy announcements or isolated financial indicators. The experience of Vietnam offers another useful point of reference when considering long-term economic development. Although Vietnam and Iraq have different economic structures and national priorities, Vietnam's progress illustrates how sustained institutional reforms, investment in economic growth, and increasing international credibility can gradually reshape a country's position within the global economy. The recognition of Vietnam as an upper-middle-income economy reflects decades of consistent policy implementation rather than a single event. For those following Iraq's reforms, this comparison highlights the importance of patience, continuity, and measurable institutional progress over time. As Iraq's economic reforms continue to unfold, one theme remains consistent throughout every official development. Progress is measured through institutions rather than headlines. Whether the focus is on banking modernization, regulatory compliance, fiscal management, or international cooperation, the emphasis has remained on creating a financial system that aligns more closely with global standards. This approach reflects a recognition that lasting economic stability depends on strong institutions capable of supporting sustainable growth over many years. Although reforms often move more slowly than public expectations, each completed milestone contributes to a broader framework designed to strengthen Iraq's financial future. Looking at the overall picture, Iraq's central bank continues to play one of the most significant roles in this transformation. Its responsibilities extend far beyond managing currency circulation. The institution is also responsible for maintaining monetary stability, supervising financial institutions, implementing compliance standards, and coordinating with international organizations. As reforms continue, the central bank remains at the center of efforts to improve transparency and enhance confidence in Iraq's financial system. These responsibilities require careful planning and coordination rather than rapid policy shifts, reinforcing the importance of gradual institutional development. Another factor that continues to attract attention is Iraq's expanding cooperation with international economic organizations. Relationships with institutions such as the International Monetary Fund and other global financial partners involve regular assessments, technical support, and policy recommendations intended to strengthen Iraq's economic framework. These partnerships are generally focused on improving governance, increasing financial transparency, strengthening banking regulations, and supporting long-term
If we secure the
economic
merger
resilience.
by the end of the week,
While
the
these
bonuses will be
initiatives often
substantial.
receive less
I
public
agree, the team
attention
is
than
ready to
currency
push this through.
discussions, they represent essential components of broader structural reform efforts. The discussion surrounding the Iraqi dinar also demonstrates why careful analysis is important whenever financial developments are reported. Public conversations can sometimes be influenced by speculation, incomplete information,
This new structure
or
truly
assumptions
represents
that
the future
extend
of Iraq.
beyond officially
Indeed, Engineer
confirmed
Hadid's
facts.
design is
Reviewing
remarkable,
documented
and the security
policy
features
actions,
are state-of-the-art.
government statements, and institutional reforms provides a more reliable basis for understanding current developments. Maintaining this distinction allows observers to evaluate changes objectively while avoiding conclusions that are not supported by available evidence. Responsible reporting benefits from focusing on confirmed information rather than expectations about future outcomes. Vietnam's recent economic milestone also reinforces an important lesson about long-term development. Achieving upper-middle income status required decades of policy consistency, investment, institutional strengthening, and economic diversification. Throughout that process, progress occurred gradually through sustained reforms rather than sudden transformations. Although Iraq follows its own unique path shaped by different resources and circumstances, the comparison illustrates how structural improvements often require patience and persistence before their full impact becomes visible. Long-term economic progress is typically built through many individual reforms working together over time. For Iraq, current priorities continue to include strengthening the banking sector, improving regulatory oversight, enhancing anti-money laundering systems, expanding financial transparency, and encouraging greater private sector participation. These initiatives support broader objectives that extend beyond monetary policy alone. Modern financial systems depend on effective institutions, reliable regulations, and strong governance structures that encourage both domestic confidence and international cooperation. Continued progress in these areas may influence how Iraq's economy develops over the coming years, regardless of short-term market attention surrounding individual policy announcements. The narrowing difference between Iraq's official exchange rate and the parallel market remains one of the practical indicators frequently monitored by economists and financial observers. Reducing this gap contributes to greater consistency within the financial system and helps improve confidence in formal banking channels. Achieving this objective has required coordinated regulatory measures, enhanced oversight, and continued cooperation between Iraqi authorities and international partners. While additional work remains, these developments demonstrate an ongoing commitment to strengthening monetary management through carefully implemented reforms rather than abrupt interventions. Taken together, the various reforms discussed today illustrate that Iraq's economic strategy involves multiple interconnected areas progressing simultaneously. Banking modernization, legislative improvements, international cooperation, institutional restructuring, financial compliance, and economic diversification all contribute to a broader modernization effort. Evaluating these developments individually may overlook the significance of their combined impact. When viewed collectively, they present a clearer picture of a country working to strengthen its financial foundations through gradual, measurable policy implementation supported by international engagement and domestic institutional reform. As always, it is important to remember that financial markets and national economies evolve over time. Official decisions are influenced by numerous economic factors, including fiscal conditions, monetary stability, international relationships, and domestic policy objectives. Because these variables continue to change, Responsible analysis focuses on confirmed developments instead of attempting to predict future outcomes. Remaining informed through credible information allows viewers to better understand ongoing reforms while recognizing that economic transitions are typically shaped by long-term planning rather than single events or isolated announcements. That brings us to the end of today's report from Global Monetary Watch. On this August 1st update, we've reviewed Iraq's ongoing financial reforms, the continuing role of the Central Bank of Iraq, international cooperation, banking modernization, exchange rate developments, and the broader context provided by Vietnam's recent economic progress. We will continue following official announcements and verified economic developments as they become available, providing balanced and factual coverage every step of the way. Thank you for watching. If you found today's analysis informative, consider subscribing to Global Monetary Watch. Turn on notifications so you never miss an update, and share this report with others interested in global currency and economic developments. Stay informed, stay patient, and we'll see you in the next update.